As the ink dries on UBS's rescue purchase of Credit Suisse, we're digesting the consequences. So Morningstar Investment Management's global CIO, Dan Kemp, is with me now. Dan, thanks for your time on a presumably busy day of commentary. Is the UBS deal a moment to breathe a sigh of relief, or is it the end of the beginning, so to speak?
Well, hello, Ollie. The honest answer is it's a bit of both. The takeover of Credit Suisse by UBS will undoubtedly bring stability to that part of the market. Credit Suisse was struggling, as we know, but at the same time, the mechanism that the Swiss National Bank has put in place as part of the rescue has unsettled investors because they've shuffled around who gets paid at which point when these deals happen. And so in this situation, the shareholders have gone ahead of one of the classes of bondholders. Now, that may seem very archaic as we're talking about it, but it's really quite important in the context of fundraising for banks. And so that's caused some shock this morning.
Sure. And is the fall in banking stocks, that shock that you speak of across Europe, is that now par for the course, do you think, in this situation? It's just something that people have got to ride out, or does it have longer term ramifications?
Well, we have to remember this is not the first day of falling bank stocks. This has happened for a few days now following the fall of Silicon Valley Bank in the US just over a week ago. So there's bank stocks have been under a lot of pressure, and that's caused the share prices to fall. But certainly the fallout we saw this morning when bank share prices fell quite sharply was a result of investors trying to digest what it means when a central bank changes around the capital structure of a bank seemingly without warning.
Sure. And so you say the phrase, without warning. I mean, as a CIO, solutions aside, like this kind of deal, does it concern you how quickly a bank like Credit Suisse can go south? I mean, is there a lesson for investors there, and just kind of noting the fragility of market confidence at times?
Well, that's absolutely the key question, Ollie. This is a unique situation. I think it's important to remember that although to most observers, the fall in Credit Suisse will seem to have happened very quickly, in reality, there's been problems in that bank going back a few years. They've had various problems and scandals that those who've been following the company and following the banking sector closely will know. So that didn't happen terribly quickly. It's just happened at the same time that we've got seemingly unrelated problems happening in a couple of banks in the US. So the timing has caused concern because people are naturally conflating what's happening in Switzerland to what's happening in the US, but in reality, quite different situations. What people didn't see coming was the way that the wind up of Credit Suisse, the takeover of Credit Suisse, would be done in terms of its capital structure, not the fact that something needs to be done about Credit Suisse.
Sure. Dan, many thanks. Morningstar is continuing its extensive coverage of this issue throughout the week. For all that and more, check out morningstar.co.uk and indeed any of our international editorial sites. For Morningstar, I've been Ollie Smith.